Big news out from Prospex Energy yesterday. Here to tell us more, Mark Routh.
Yes, good afternoon. Pleased to be talking to you this afternoon.
So what's going on? There's been a placing, an open offer, a subscription, and it's all about the project in Spain that you're working on. Tell us the sort of nuts and bolts and the ins and outs of what's been happening.
Yeah, I have to say this is the culmination of several months' work trying to put this deal together. We've been aware of the Viura gas field in the north of Spain for some years now. It's one of only 3 producing gas fields onshore in Spain. We own one of them at El Romeral, and we own 49.9% of that. And so the plan here is to invest into the company that owns the Viura gas field, which is another producing onshore gas field in Spain. And so we'll have a small percentage share of that. We'll be a non-operated co-venture partner with the operator, who is HEYCO Energy. HEYCO Energy is based in Dallas, Texas, and they are looking for partners in the field. And we qualified in the round to co-fund this development program, which they're looking to spread their risk. The important thing here is that HEYCO Energy itself is investing in Prospex Energy, and they will become a significant, more than 10% shareholder in the company, which is a very good vote of confidence in Prospex Energy and our team.
And tell us a bit more about the details of the fundraising that you've just announced.
So we had to get this done quickly. The development well on the field is drilling right now. It spudded on the 22nd of June. And as soon as it hits the reservoir, this deal would have been off. So we needed to get this deal done quickly. It's going to reach the reservoir in a matter of 2 or maybe 3 weeks. And the well will be then put into production and on production in September. So this is a very short-term production income. The field is already producing from one well, but that well is producing intermittently because of water coming through into the well and insufficient water handling facilities in the production facilities at Viura. So part of this development plan is to drill, firstly, this well, do a workover on water injection well, and then drill 2 more wells in 2025 and 26. The funding plan is that the farmers, and we're not the only people co-funding this. There are some US investors that have subscribed to shares in the company which owns the Viura field. The people co-funding it are they're going to be funding up to 50% of the costs of this development program in order to earn a 25% share in the field. So it's what's known in the farming industry as a 2-for-1 promote. It's a good deal. It's an exclusive deal. This wasn't offered to just anyone.
And just tell us also a little bit about how big this field is.
Well, the reserves, the gas in place in the field is 211 billion cubic feet. That's 6 billion cubic meters. The reserves are estimated at 105 billion cubic feet. That's 3 billion cubic meters. To date, only 16 BCF, that's half a billion cubic meters, have been produced. So that means the remaining reserves are some 90 BCF or 2.5 billion cubic meters. So we're going to be owning up to at least 6%, hopefully a bit more, depending on the outcome of the retail placing. We're going to be owning 6% of not only those reserves in the ground, but the production that's coming from the well now and the well that is drilling, but also, importantly, the facilities at the surface which are connected to the national grid. This is a crash-hot deal. This is an excellent deal for Prospex. We are farming in with a respected and very competent operator, people whom I've met in Madrid, and I've met the CEO of HEYCO Energy Group in Dallas, Texas, and they have voted to invest in us in order to assist us investing in the Viura gas field through HEYCO Energy Iberia, which is the company which owns the field.
So you've talked about the timing to the interception of the reservoir. What else in terms of this deal and sort of future events can investors look out for in terms of news flow in the coming weeks and months from you guys?
Well, just before I get onto news flow, I had to say that the urgency to close this deal before it got to the reservoir was paramount. We didn't want to lose this deal. Unfortunately, yesterday, the market turmoil was just extreme. We've had some very bad news from the US, which had a very negative impact on a lot of orders that we were placing. And we had several orders pulled as a result of the market conditions yesterday. But we had to get this away. And I firmly believe this is a huge vote of confidence for a very good deal in the company. And the news flow, to answer your question, is coming very soon. That is when we get into the reservoir, that will be tested and put on production in very short order. And I very much look forward to updating our shareholders on the increased production that we're going to be enjoying from the field and then reinvesting into the development program in order to increase the production from the current some 58,000 cubic meters a day, that's a gross number, up to 1 million standard cubic meters a day in the future.
So significant cash flow for the company from this project.
Significant cash flow, significant reserves books, and significant production, yes, as we move forward. And this puts us in place to be a very important supplier of energy to the Spanish nation, something which the Spanish nation needs to have energy security, in spite of the prevailing wind against fossil fuels generally in Europe. People realize that they need to buy gas in order to fill the gap between the renewable energy sector and the transition fuel to the future as we move forward.
So you mentioned the Spanish government. Perhaps before we wrap up, you could just quickly tell investors and viewers what it's like to operate in Spain. Do they make it easy for you? Is it a good operating environment for a company such as yours?
It's a good operating environment in so much as the local economy and the local network of equipment is there. I can't say that the regulator makes it easy for you. The permitting process is very slow. There is, by law, and quite right too, a very strict environmental impact assessment process to go through when you permit for wells. But the environmental impact of onshore gas wells in Spain is minimal. And compared to importing liquefied natural gas from the USA or from the Middle East, the carbon footprint of LNG is 30 times worse than developing indigenous local onshore gas. This point needs to be driven home to the environmentalists. You know, producing gas is not a bad thing. We need gas to fill the gap between the renewables and what we're doing now. Otherwise, we're going to have an energy crisis. So the whole carbon footprint story has to come out correctly.
Plenty for us to think about you've given us there, Mark. Thanks very much for joining us today.
Thank you very much.